Gold prices are holding above $1,300 an ounce today as its dollar softened after the mixed US data that you saw in the previous week. On your screens, we have seen 0.5% of decline coming in at this point in time. Remember, the prices had gained or rather declined 3.5% in the previous week as well, pushing the gold prices below 1,300. We did see prices go all the way down to 1,280. Today morning, they were trading at 1,315, but bit of a decline coming in yet again in the European markets right now. The crude prices in the meanwhile also seem to be slipping slightly after the Eurozone data showed retail sales declining across the board for the first time in 3 months. Investors were also cautious after Iran and the US signaled a will to improve relations, which added a risk premium to financial markets and helped prop up oil prices. The Brent crude prices also have seen support after Libya has reopened a terminal closed by the protests. On your screens, nearly a percentage point of decline coming in for both Brent and NYMEX crude prices. Let's get in then. Vibhu Ratandhara, he's AVP Commodity Research Bonanza, and also joining us is Vijay Bambani, who's author and CEO of BSPL India. Vijay, hi, let's start with you first. What are you making of the crude price movement? Because the Asian market started on a positive note, but after Europe opened, we have seen a decline coming in.
Absolutely, Manisha. You summed it up beautifully. The risk premium has basically expanded. And what you are seeing is some amount of risk-bearing capability coming back in the market and bidding prices higher. Now, fundamentally, of course, we are in hurricane season. Of course, there have been no major hurricanes reported so far. But trader mentality being what it is, this part of the year does tend to see speculative premium expand on the energy space. And add to it the positive news of Europe and the US economy showing signs of at least green shoots of recovery is adding to the speculative premium. I think 108.5, 109 could also become a reality if you see any further bullish news coming in. But I would be a little wary of buying crude on the MCX at current prices. Basically, I would wait for at least 2 to 3% declines, if at all they do come. I'm not saying that they will, but unless they actually declined by that much, I would feel a little wary of buying at these levels.
What's your sense coming in for the crude prices? In the Indian markets, would you say that 6,600 perhaps is a level that market would continue to see some resistance at?
Definitely. Somewhere around 650 is quite looking at resistance for the domestic market. As far as the today's trend is concerned, I think the two reasons is the playing the major role. A weak strengthening of rupee against the dollar, quite strengthening of rupee against the dollar, and the European data, which is quite bearish side. So these two are quite profit booking, I can say, for the day or two trades. Going ahead, I think 6,400 is a very good support level. As long as it's hold above the same level, I think the towards potential target is somewhere around 6650 to somewhere around 6,700 also in the short while.
Let's talk about gold and silver prices then, and we have seen a bit of decline coming on to that one. Today morning, of course, one was on the stronger side, Vijay, but what do you think? Is this the European data that has come in and that's the reason you have seen some pressure coming in?
Absolutely, Manisha. As economic data improves, the safe haven buying is likely to take a little bit of a back seat, or it'll ease off if not taking a back seat. So I think $1,288 is a level to watch out for. Not necessarily that it would come down to that much, but $1,288 is a level I would watch out for very keenly in the coming couple of hours, maybe up to lunchtime tomorrow.
What about silver prices, Vibhu? How would you be trading that? Because 42,000 continues to be a resistance for this space.
Definitely. If you can look up in the silver, I think somewhere around 42,400 or 42,500 is continued to be resistance, and somewhere around 40,400 to 30,900 is the continue to support for the last, I can say, last 1 month. So it's looking quite on the range bound side because of some support is seen from the bullion side and some pressure seen from the base metal side. For the short while, as far as the pure technical is concerned, I think we are the support is seen somewhere around 40,400 to somewhere around 40,800. As long as it's hold above the same, I think going buy on the deep side is quite looking opportunity for the target of somewhere around 42,400 to 600 in the short while.
The base metal prices then, and they started the day on the weaker note and have continued to be weak in Asia and in Europe as well right now. Vijay, what are the sense that you are making? Because the data more or less has been slightly positive from China. If you look at the PMI numbers coming in from that one, the US of course has lagged behind. But how would you read copper perhaps at around these current levels of 425 odd?
Manisha, copper is looking like it's consolidating at the present levels, which in a way is not bad news, because no bad news also sometimes can be taken as good news. So 418 to 421 as a band is something that I would watch out for. As long as it keeps its head above the 421 mark, I think the bulls have a fighting chance to take it up to 432. Within the space itself, I think one of the most interesting counters today is nickel, because not only is it managing to hold its own, but it's also logging minor gains at the current levels. So I remember talking about 854, 855 a couple of trading sessions ago. Now, this is a threshold I would watch very, very keenly. If nickel was to break out above this, I think 868 to 874 is a range I would look out for. In case that doesn't happen, looking at the flip side, I think 838 is a very strong floor in the coming 1.5 trading sessions or so.
Ibu, what's your sense? Which one would you pick up in the base metal space and why?
Definitely. I think one need to keep eye on the copper as well as the lead also, because I think copper is same. The support level is somewhere around 420 to 419 level. So it looks like to buy in the deep with a target of somewhere around 434 to 438 also in the short while. As far as the lead is concerned, I think 130 or 130.50 is a very good resistance belt. If it's managed to break the same, I think in the short to medium while we might see somewhere around 134 to 135 level also for the lead.
Let's talk about agro commodities now, where the pulses prices have seen a bit of a gain continuing today as well. The chana prices are trading nearly 2% up on your screens. 2900 now has been crossed on the upper side. The decline, though, has come in for the spices space, especially mentha as well, which is trading more than 3% on the lower side in the trade. And you have seen continuous decline for perhaps a second or third day coming in for that one. 850 just about holding. The turmeric prices are trading down as well. You also have seen decline coming in for jeera as a commodity too. The gains, though, have come in case of the cardamom prices. That one is trading an upper circuit at this point in time. Sugar also trading steady in the markets. It's the edible oil space that has seen a bit of a decline coming in. There is some consolidation now coming in for the Indian rupee. The international markets also now looking into profit taking is something that seems to be pushing the edible oil space slightly into profit taking mode in the Indian markets as well. Vijay, let's start with pulses first, and chana 2% yet again on the higher side. Would you come into a buy mode here?
Not really, Manisha. I think this is more of short covering rather than a very keen buying, although I'm pretty pleased that chana is working out the way we had anticipated on our show. But fresh buying at 2,900 odd levels, I would be a little wary. I would want a decline, if at all it does come in. And should this short covering continue, I think breaching the glass ceiling of 3,000 could also be in order. And looking at the news, the way NSCL is talking about going about clearing payments, I think there might be a little bit of exuberance still in the pipeline, especially for agri-commodities. And therefore, 3,000 plus levels is what my rationale is.
What's your sense coming in for mentha? Because 3% down now, 850 just about holding. Would you look at some more further declines?
I would, Manisha. I think 825 might just be in order in the coming 1 or 2 trading sessions. It may not actually go there in a linear, extrapolated manner, 2% every day, but it could be a very jagged journey, 2 days down and 1 day up kind of a thing. But 825 is something that I'm fairly certain should come.
How about potato, Vijay? Because that is something you closely, very closely follow. Again, another day of upper circuit coming in for that one. What's your sense onto this one? Do you think there could be fresh buying coming in here? People who are holding should get into some profit-taking mode. How would you want to trade?
I think so, Manisha. As a matter of fact, a disclosure here, I'm booking out my longs in potatoes, because I remember talking about buying potatoes from the 680 odd levels in the September future series. What you are seeing is the August futures. September is quoting at a significant premium to that. And having seen a near 100 rupee run in potatoes, I think it's about time you started taking money off the table. So 790 odd levels in September is a mouth-watering level to take money out.
And how about the edible oil space? Because we have seen that one continue to be very choppy, and today seems to be a weak day on that.
Yes, Manisha, edible oils are likely to remain under pressure. I think what you are seeing is a stability in the rupee. Secondly, you're seeing a possible compression in demand and more than comfortable stock of supplies in Malaysia and Indonesia. Even though there is talk about excessive rainfall impacting the domestic crop, but majority of our edible oils, especially crude palm oil, also refined soya oil, tend to be imported. So since there is a glut there in the international markets, I think there would be a downward pressure exerted both on soya oil as well as CPO. So I would actually look out for short selling opportunities rather than bargain hunting here.